Welcome back to another edition of my watch list. This is Wednesday. Again, I'm coming on tonight. I'm thanking everybody for the opportunity for them to come on as well. Today, I'm going to talk about the two stocks I have on my watch list and kind of go back and look at what I already have, see what opportunities. Today, I'm going to talk about ExxonMobil, which is XOM, and then Ford. Now, these two stocks that I'm going to be looking at, rather add to my watch list or take away, the reason that it's on my watch list is because this is what was requested. I want to thank you guys. If you never liked, subscribe, or followed our channel, you definitely want to do this. If you're trying to learn how to build a watch list, you want to watch these live events that we do every Wednesday afternoon or evening, whatever you want to call it. You want to make sure you watch those because that's when we kind of go in and we kind of do a deep dive in what is in that you put on your watch list or what you don't put on your watch list. I want to thank everybody for helping us also reach the 100,000 marker of subscribers. This is my request. Don't forget to like, subscribe, share the video with a friend. We're going now to 1 million subscribers. That's our new goal. We already hit it. I want to thank everybody who's been with us from the first subscriber to we now being over 110. We're going to now go for 1 million. On today's live stream, this is what I'm going to go look at. I'm going to do a deep dive into two different positions. And these positions that I'm looking at is, do I want to add or do I want to subtract? As you guys already know, I have a current watch list, and that current watch list that I have is one that, me personally, I think it's a cool watch list. It all goes back, though. If you want to go back a month ago and you watched the first live stream, what you're going to notice is the positions of what I took. Now, it's not a secret. This is one of the coolest things is, I kind of looked at it from a standpoint of, look, this is my current watch list. This is what I'm doing. This is where I'm going at. This allows for everybody to be able to call me out. Is Primo actually good at what he does or he's not? But this, I want to let you know that it's not a reflection on CFS Studios at all. This is a show that I actually do on CFS Studios. So this is me. If you notice, if you look down the body of it, tells you that there's a disclaimer. I don't ask you guys to pick any of the stocks or even put them into your portfolio. This is my personal watch list. This is the watch list that I'm looking at for my personal self. I do not want you guys to mirror this. Do your own research. Now, you may compare some of the research that I have, but do your own research. You should make all your decisions based on two factors. The first factor is your own personal money. That's your first factor, your own personal money. Whatever money you got access to, that's how you should make your decisions. If you got $1,000 in your personal bank account, that's the first factor. That's what you have resources for. That's what you should use. Don't think about the resource that I have access to because it's not comparable. And here's number two. What is your overall real rate? Now, most of us don't use our real rate to do things. And I'll give you a very simple understanding of real rate. Your real rate is the true rate that you need to make in order to pay your bills off, all in a 12-month period. Now, I'm not talking about anything that you can't pay off in a 12-month period. I'm referring to all your debt. That means your mortgage, your car payments. Can I pay it off in a 12-month period? That's your real rate. A lot of times we're using our net income, which is not our real rate. It's our draw into rate. So today, as I jump and I look and I dive into ExxonMobil, it was asked on the last live stream 2 weeks ago, would I put ExxonMobil in my portfolio? And today I was talking and it was asked, what do you think about Ford? Well, I'm going to tell you, will I add it to my watch list or would I take it away? But before I go into that, let me just address one thing because I think this is cool as well. Let's go back and do a little history report because we want to know what's changed. What's changed since, and we got a lot that changed. Let me just be very clear. A lot has changed since the first time we started the watch list back on February the 1st. Okay, back on February 1st, the only two things I had on my watch list was cruise lines, was Norwegian Cruise Line and Carnival Cruise Line. I didn't have Royal Caribbean. I didn't do it in that. I just had those two, Norwegian and Carnival Cruise Line. Now, you may say to yourself, well, what's the purpose of that? Well, I want to go back because I gave some price points at that time. And there was an opportunity. If I followed my own advice, I actually could have made $300 to $400 on these trades, just so you know that, over a course of a month. So the idea of me swing trading, yes, there's possibilities there. Did I take advantage? You don't know. You got to join the subscription to find out did I actually do it or not. Just a little plug for that. Now, let's keep this in mind. One of the things back in last month, in the month of February, that we looked at what was the price point. Now, what was the price point if I was going to take and add Norwegian Cruise Line and Carnival Cruise Line? And here's the answer to that. I was looking at the time on February 1st, $10.87 for Carnival Cruises, and I was looking at Norwegian Cruise Line around $15.35. I clearly stated that, there was an opportunity for me to buy it. Anywhere between the price and what I had as a price point, I said, well, if I could do an entry, I like to do it around $11.30 to around $13. And then on the other side, I said, I see the high being $20. That's Norwegian Cruise Line. For Carnival Cruise, I say, that's just bad news. Around $7.35 to around the 1087 was fine. I could have took that position, but I saw the high being $14. Let's keep that in mind, because as of today, when I look at it, let's see if has anything changed on that. Did the price point get better? Is there still an opportunity? Because these were my first two stocks. Before I jump into Exxon Mobil and Ford, let's see how I actually fared. If I chose to do it. Remember, I said it was trading at $10.87, and I was telling you about this. Today, Carnival Cruises has $8.80. So that's on my watch list. It's $8.80. I still have the high at being $14.60. I had the low being $7.37. And on the flip side to that, let's look at Carnival Cruises, because we're looking at opportunities. Now, in order for me to buy Carnival Cruise today, this is a thing that's also interesting. I at least have to have. Now, here's a disclaimer. I only buy things with groups of 100. I don't buy anything in outside of groups of 100. Now, if I'm forced to because of a reverse split or any reason that I end up getting less than 100, I immediately want to go to 100. You just need to understand that. So right now, if I didn't take Carnival Cruises at the time that I did back in February, the opportunity is still there at $8.81. As I mentioned before, there was a low that I had priced in, and that is important for you to know because it's going now towards that low, which means it's even cheaper, less money I have to use and still get to the same results. Now, that was the thing with Carnival Cruises. Now, with Norwegian Cruise Line, now you may say, why am I talking about cruise lines? Well, because here's the thing. They're out of favor. Now, you may think because they open back up the economy that the cruise line is back in favor. No, it's actually still not. The travel industry, think about what the feds are saying right now. When I'm doing my synopsis, the Fed is saying, I do not want the American people or any foreigners to come over here and spend money. Entry rates are high, which means you paying more money to get less stuff. So the idea that you would think that the cruise line industry, when they're trying to halt spending, that's what they're going to do. Now, Feds raised 500 base points over the last year. Now, here's a consequence of that. And it's just not here in America, but recently we've had two bank failures. That's recently, two bank failures. We've seen that Silicon Valley Bank got shut down by regulators, and now the Signature Bank. However, there was 4 other banks that was part of that. I talked about that yesterday. So if you want to know, check the live stream yesterday. I'll put a description of that live stream in the feed when this is done. Go back and look at yesterday's live stream. I actually explained that to you, what's going on. Now, today in Switzerland, so this is just not America, but Switzerland had several regional banks do the same thing that the other banks did. They began to collapse. So if you like me, you're saying, how do I trade around the situation, what's going on right now in the economy? Well, you're about to figure out how Primo trades around the economy, because over the last month, I've been able to capitalize on a small account. I've been able to capitalize being profit and green. Now, one of the things I want you to understand, keep in mind, I've been able to make profit, but it's the key to this. Watch your drawdown. This is something that most people may not pay attention to. I have to pay attention to my drawdown. Drawdown is a price. Now, it's not losses, but drawdown is from where you originally bought the price where it draw down to. If I would have bought Carnival Cruises back February 1st, I would have paid $10.87. Today is $8.81. That difference between the 1087 and the 880, well, one, it's less money today to buy Carnival Cruises, so it's a higher upswing, but that's the drawdown, the difference between 1080 and 880, just so we're very clear. Now, I share that with you because when you're talking about looking at a position, what you're going to do, you need to know that. Now, again, I mentioned about Carnival Cruises. Let's look at Norwegian Cruise Line. They were my first 2 stocks that I had on my list. Now, I'm telling you, there's so many opportunities right now in the market. And I know it doesn't feel that way, but you got to just say to yourself that, okay, what am I missing here? What most people are missing is the apprehension of fear. Here's the thing. Back in the day, the word saving means putting money in an asset that appreciates in value. Today, saving doesn't mean the same thing. Today, what savings mean is I need to put my money, the money that I have, I need to put it in the bank and do nothing. Well, that's the worst thing we can do. I mean, that's the worst thing I could do, because if I put my money in the bank and I do nothing with it, the dollar itself, every time the United States government prints money, inflation's eating away at it. Here's an old saying that is still true, and this is from 24 months ago. You can literally go to the dollar store and you now know that it costs literally $1.37 for a non-food item. We're in Nebraska, so let me just put this perspective out there. In Nebraska, there's no food cost. So it's $1.25 for a food in the dollar store and $1.37. So that's 36 cents increase, $1.37. That's 37 cents beating away at that dollar. So that means your dollar only has 63 buying power today. It costs $1.37 to buy a daggone dollar piece of candy. Keep that in mind. So that lets you know we're in a reflation. Everything costs more. Cereal boxes are getting smaller. So you got to take dollars and convert it into actual cash. If there's anything you're going to learn from me, is how I take my dollars and put it in an asset to grow my money. And my whole reason for growing that, guys, is for me to make money. I don't want to make the only money I make is because I go to work and I draw in the income. That can't be the only money I make. I have to have my money work for me like it's an employee. And that's what it is. Your savings should be generating money. Now, back on February 1st, I had mentioned that Carnival Cruises was $15.35. Today is $12.97, period. I still have Carnival Cruises right now from what I have it at, still going up to $20 in 24 months from now. That is how I have it. That's the due diligence I have. Once we come out of this, and here's a key. Now that we know those were first two stocks, the opportunity still exists. And it's cheaper than what it was February 1st. That's the benefit of time. Now, if I did nothing and I have this opportunity, or I did something, I'll now know what I need to do because the opportunity presents itself. Well, here's the other thing I need to talk about, though. So what about ExxonMobil? This was a question by one of the viewers who watched the live stream last month. Do I think ExxonMobil is actually a deal? I'm just going to just simply put out, I did my due diligence. And I'm going to give you a little correlation about commodities or gas when it comes to that, which is an input. One thing you need to know about petroleum is an input, which means you have to convert that into gasoline. So one of the things that I can tell you is that when you're thinking about an input, that's ExxonMobil. Let me just tell you, ExxonMobil today is trading for over $101. It does pay a dividend every 100 shares. It does pay a dividend. But here's my problem. If I wanted to buy ExxonMobil and it's trading at $101, if you look at it, you find it's trading for $101. You see that for yourself. That's going to cost me $10,000. $10,000, what pretty much $10,000, 100. So it's $101. I have to have 10,000 to buy 100 shares to get paid 91. That's every 90 days I'm gonna get paid 91. It does pay a dividend. For those out there who are dividend followers who love dividends, when I did my research with ExxonMobil, it's not worth me paying $10,000 to get a 91-cent dividend. Now, listen, if we do the math on that, you're talking about getting a little over $360 a year, period. Okay. So you're looking at getting over $360 a year. But here's my issue with that. If the current president doesn't get reelected and a Republican takes the position in administration, you have to understand ExxonMobil price is not going to be $101. Period. It's not going to be 101. It's going to come down. Let's talk about some things what we call systematic risk. We talk about capitulation. ExxonMobil, whenever a Democrat president's office, they drive gas prices up. This went up when it was Barack Obama. It went up when it was Biden. Just to be clear, anytime a Democrat's in office, they like high commodity prices. And we're talking about inputs, things that have to be converted into a finished good. When Republicans take the House, then you automatically have to say to yourself that they don't like inputs. They actually like growth companies. They always pushing for growth. So we've seen this doing Reagan. We've seen this doing from Reagan to you go to Trump. Now whoever else going to be. But you got to say, can I buy ExxonMobil knowing that there's 2 years left in the current administration? If he doesn't get reelected and I overpay for this thing and this thing I expect, and this is my personal due diligence, I expect ExxonMobil to be less than $55 if Biden, the current president, doesn't stay in office and a Republican take the House. There's no way ExxonMobil will stay at $50 because they're going to take away the input factor because of the administration. And that's just the reality of it. If you've never looked at who was in office and how commodity prices work, then you may want to pay attention to that because you're about to get hit across the head. So ExxonMobil, the time has passed. So I can go over a long video, but ExxonMobil time had passed. You had October, excuse me, you had March of 13 of 2020 to October of 2020 to buy, period, ExxonMobil or any of these gas companies, where regardless of who they were, any of them, you had that small window, 6 months. You could have bought whatever commodities you want, because if your belief was the Republican President Trump was not going to be reelected and it was Biden going to win, you made a good bet. You really did. You would have guessed. I did my research. Says okay, if Trump would have stayed in office, ExxonMobil would have kept trading between the $32 to around $48 swing. Just to be very clear, because that is systematic and that's administration. So you got to know that. On the flip side to this chart, now that ExxonMobil is at 101 and the administration change, and it comes Republican, that is a serious. It's not be a loss. It's gonna be a drawdown. If you're a long-term holder of gas companies, it's not an issue. You're gonna hold it anyway. Most likely, you probably would have took some profits, because if it was me, I would have took profits in ExxonMobil automatically. I would have took some profits. I wouldn't even wait. Me personally, I would be, if I had ExxonMobil today, I would be taking some profits, especially if I bought it, because I personally had ExxonMobil in my portfolio around 32. I got out of it around 48. Around 48. Went into some other areas that I felt more fit based on the funds I had access to. Now, what do I see it? To give you just a quick breakdown, that way you say, well, what did you see it as when you did your research? This is what I saw. Entry price of ExxonMobil, no matter what takes place, have to be under $53. Any more than that, you're going to see a drawdown anyway. It doesn't mean you won't make money. They may keep the dividend at 91 cents at $53, which, you start looking at that pretty much. That's literally, if you go over, 300, you're getting over $360 a year. You pay, $53, which is $530 for 100 shares. That meant that every 5 months, you pretty much getting your stock paid off the first 100 shares. That makes sense when you think about it. You only pay $530. It take about 16 to 18, pretty much 6 quarters, and you got no money in the trade. You keep getting the dividend. That makes sense to me. Now, on the other side to it, if Biden does get reelected, then I do see this stock pretty much trading up to be $117.70. It's about a $17 increase per share, based per 100 shares over the next 24 months. But remember, he only got 2 years left to either get reelected. If he does get reelected, that price is getting down. If he gets reelected, it'll stay up. It's just the way the administration works. They like inputs to be actually to do more. If you got an input that you got to convert to something else, you got to do more. So for me, because of the cost of ExxonMobil, I did not put this on my watch list, or my current watch list. Just so you know, I didn't do it. I still have my watch list. You can check down in the description at the end of the video. You can check it out. But if it's your first time jumping on a live stream, ever seeing me talk, don't forget to like, follow. That way, every Wednesday when I go through this watch list, you can probably just skip right down, look at the body, and be like, well, I'm gonna just look at this. I already seen it, and you can go do the rest of your day. You say, hey, this is, again, do your own research though, but don't forget to like and subscribe, because that helps our channel. Our goal is to get to 1 million subscribers. So we need your help. And the only way we can get there is if you hit the like or you hit the subscribe button. If you got a stock that you want me to look at, say what I added to my list or not, hit it in the comment section, type it in there, say, hey, what do you think about this stock? I can normally do a deep dive. I even call the competitors. When I looked at it, most of the people, when I did my due diligence, I always ask the oil company, another one too, because you got Chevron, you got Shells. I asked that question. What are you doing that ExxonMobil is not doing today? It's kind of interesting, because they actually tell you what ExxonMobil does this well. They don't do this well. We do this better. You kind of get those answers. In the last 2 weeks, I had some fun getting these answers. But I'll tell you, ExxonMobil, as far as my finances are concerned, is too expensive for me to actually add it to my portfolio. So regarding me putting ExxonMobil into it, I just need you to know, didn't happen. Well, let's talk about Ford Motor Company. Now, we know that Ford Motor Company is actually what they consider a blue check stock. It's a very old company. It's been around for a while. Here's the interesting thing about Ford. I understand that it is in a price point that makes sense. We go back prior to 2022. We go back in 2020. Ford Motor Company, at the height of when the market was dropping, was around $4 to $5. This was back, and again, We go back from March, I want to say March 13th to around March the 15th. It actually dropped all the way down to it was trading under $5. Since that time, coming into it, we go back into the second situation where you see the market for overall economy begin to shrink. This goes back to that time between the third quarter of 2021 all the way to we are now. And what has happened? It's pretty much stayed consistent. It stays right around $11. It'll bounce back off that 11. But would I add a old Ford Motor Company? I know right now they are just the number one trucks. They do beat Silverado. People always ask me, Ford Motor Company sells more trucks commercially in America than anywhere else in the world. They got to beat. I understand you may like the Silverado, but Ford's the number one seller of trucks, period. As you know, a lot of these companies want to go away from gas automobiles and they want to strictly just do trucks or electric vehicles. Ford's trying to go completely electrical. I get it. But here's the thing about Ford. This has been a stock that has been on somebody's play. Ford does pay a dividend. So I got to put that disclosure out there. Ford pays a dividend. It pays 15 cents every 90 days. Well, right now at $11, Ford is trading for $11. So what I added to my personal watch list is $11.71. I only buy in groups of 100. So that meant that I at least had to have $1,171 to buy 100 shares of Ford. That means I get a 15-cent dividend. Anytime you hear the word dividend, people say, oh, that's a good thing. Well, let me just explain to you. If they pay you $15 and my total price was $1,171, I need to take 15 off that 71 and bring that price down. Again, I got to take that 15 off that 71, bring the price down. You got to expect that Ford itself, whenever they pay a dividend, they're paying you so the price can actually go down. A dividend pays you so your value comes down. That $15 on 100 shares, that's why I don't say 15 cents, because I round everything to 100 shares. If you buy 100 shares, it's going to be $15 you get paid. Take the 15 off the $1,171 that you bought it for, and that's your new price. Expect it to go down by 15 cents per share. That's what a dividend is supposed to do. It throws people off a lot of time who a dividend get paid because they say, well, the price going down. Yes, there's times that you get paid a dividend and the price goes up. On my watch list that I add Ford, let me just tell you an interesting thing about Ford. One, I don't own a Ford truck, so I'm not going to, I don't have a bias against it or not. I've driven it. It was part of work trucks that I had in the past. I had that, and I actually had a Chevy Silverado, so I have had both of them. But when it comes to growth, if I'm young, everybody has different age brackets. I'm not about to retire no time soon. So for me, anything on my watch list, let me give you a little insight is I have to have growth, companies that can grow higher than even if they do cut the dividend, or they don't have to have a dividend. I just need growth in it, because what I'm using my money for is to make income. The word retirement doesn't even come out of my mouth. I'm gonna be 100 years old. I could be 150 if I live that long. Let me see. If I am blessed to live that long, I'll be that long. I'll still be making money. So the idea of me living off Social Security, that's not my thing. That may be yours. There's never going to be a retirement for me, because as long as I got cash, I'm going to be making money with my cash to the day I die, just so you know. So when I looked at Ford Motor Company and I said, okay, am I going to add this to my watch list? Even if Ford has blowout sales in the electric car industry, Tesla was the first to enter it. But if Ford Motor Company can catch up, now that people think Elon Musk is distracted, the questions will still boil down to this. I need to have a $1,171. Ford is a company that moves like a slug, though. The CEO talks, but doesn't talk a whole lot. When I did my due diligence, I do see that Ford, and I'll just be honest, I see the opportunity with Ford where it has some potential. I see it going around $17 to $20 too. However, they're a slow mover. They're the grandfather of grandfathers. So when you think about holding something in your portfolio, you want growth, you're going to want something that, even if they hike rates, it's consumer discretionary. People got to buy vehicles. Companies got to switch out cars, especially if they in the construction field. California is the number one buyer of trucks, that state, but it's so expensive to live there. So my due diligence is that, it fits the description of what I have in my bank account. But unfortunately, I didn't put Ford on my list. I didn't put it on my list. I think some of the other companies I have on my list, are a little bit better positioned with a higher upswing. And if you've never seen my watch list, my personal watch list, make sure you check down in the body. Go look at the other live streams. Just click in the body and you can actually see my watch list. Don't forget to like and subscribe out to our channel. The whole goal of this is to kind of give my opinion and allow you guys to do it, but just don't buy whatever because I'm talking about it. If you want me to look at a stock to see what I added to my watch list or not, that doesn't mean that you should invest in it. Just want to be very clear. But it does mean that I thank you for the tip, because I might have wasn't looking at this stock. There was a stock I heard about today, but for the respect of the person who had told me about Ford, they had a stock that they were talking about, and I didn't do my due diligence, and I said I wouldn't mention it, so I'm not going to mention it to honor what they said. But if you have a stock that you're thinking about, remember, here are the two things that you should always do. And it should never change. You should always look to say, well, if I'm going to do a stock, I need to at least buy 100 of it. Two, I need to have that amount of money. So if a stock is $58, that's 5,800. If the stock is $10, that's 1,000 shares. I mean, $1,000 you got to have. If you don't have 1,000, the next thing you need to figure out is how long will it take me to get that amount of money? If you're not going to get that amount of money, then it's a waste of time. You should never buy any stock because a friend told you about it. You should buy the stock because you did your own research and you understand it. Because that way you can't blame nobody if you're wrong. And if a person, like for me, any stock in my portfolio, I'm looking at 24 to 26 months out. So I'm looking at, literally 24 to 36 months. So I have a long-term view. My long-term view allows me to make an informed decision and also allows me to size into the trade because I'm not looking at a short-term basis. If I am looking on a short-term basis, then I also need to consider a couple other things. How much money will I get more access to? You should never go into the stock market at all at any given time and think that you, without having a plan to understand what happens if you have to sit down in the trade. If you never heard that term before, it means that you're going to be in this trade for 36 to 48 months. If you got to sit down, or it could be from 12 months to 48 months, you're going to sit down in the trade. And you could be sitting down in the trade, which means that you're going to now have your money tied up for that long. So I'm a long-term holder. So to me, sitting down in the trade for 48 months is no breeze because within that 48 months, I'm going to make money anyway. So that's not the issue. But the issue, I think most importantly, is this. If you're an individual right now and you have never had nobody to kind of help you kind of see how it is, there's three things that you find about our channel. Our channel, one, is an education channel. Two, every Wednesday evening, I kind of go over a live stream. I'm going to get back to the IPO stocks. If you don't think right now, there's not going to be a lot of IPOs because the rates on any type of tech, especially what happened recently, and especially when the Fed's saying they want to slow down the economy. So I'm excited that, in the next 24 months, we probably find out, because most of the good IPOs that didn't come out in 2020 and 2021 because of, especially when the recession started in 2021. Now I know that's a bad word for a lot of people, but the reality is whenever banks start to default, we've seen this in 28, we've seen this in the Great Recession of 2008. We also seen it in the dot-com area of 2000. Banks start to collapse. Regional banks first, big banks second. But we now seeing it. Switzerland had the same thing. China, HSBC bought only China assets from the UK division of Silicon Valley. They only bought Chinese, and they only bought one being, which was assets they already had a stake in. As you know, the Chinese government really is not a country. It's actually it's like a big venture capital company that actually owns assets around the world. That's what makes China very unique. The United States government, I'm not going to say they should even consider doing that, but they should take a picture out and be owning some of these companies to pay this debt off that they keep doing by all this excess capital. But going forward, we're going to have our IPO list, what's coming out. I don't see any IPOs coming out this year that I'm going to talk about because of the interest rates and how bad they beating up technology stocks right now. Until the Fed start cutting rates, we're not going to see real good IPOs from companies that were privately held that's now out public. I'm going to tell you that. There's no way. But what I can tell you is there is opportunities. In the last month, just trading under $2,000, opportunities presented itself to make 24% in the market, period. That is definitely been proven. Again, if you've never liked, subscribed to our channel before, I would like to welcome you to do so, because our goal is to get to 1 million subs and at the same time continue to educate you. Every Wednesday night, I'm going to come on and talk about my watch list. If you've never liked anything before, understand likes help us. It helps us so it pulls up in the algorithm of YouTube. So we appreciate any video that you like. And it doesn't even matter if you give me a like or a thumbs up or a thumb down. If you don't like the content, give me a thumb down because those things help, just so you guys understand, to pull the algorithm to help us out. At the same time, I want you guys to know that on my watch list remain the same. Ford Motor Company is not a bad company, but I actually need growth. I'm still young, and my goal is, to be quite honest with you, is to beat the market. If I don't do anything else this year and the market doesn't generate 24% just on whatever I've taken place, and the market does, let's say 12 to 18, I beat the market if I don't do nothing else the rest of the year, but just add money to my account and do nothing because I'm already standing. So I always tell people, if you can get to the point where you make 24% in a 12 in a month on whatever money you use, and you don't do nothing the rest of the year, and the market doesn't do better than 24%, you beat the market. You did it in 30 days. Stack your money up. So my goal the rest of the money is to keep, continue to work, continue to add money to my account, continue to look at my watch list, continue to make decisions that fit my goals so that I can take cash that I have and then make money. Now, I'm going to give you guys an idea that I want you to think about. And I want you to really think about this. If you never think about this before, is this. When it comes to you using your resources, I'm going to tell you now, everybody's going to tell you that you're crazy. So be very mindful that if you're going to tell somebody, oh, I'm messing the stock market, they're going to say, you see what's going on? So let me just give you a word of advice. Don't tell the people who don't do what you do or have the same ambitions what you do, because they're going to stop you. That was the greatest lesson someone told me. Secondly, there are so many people who rather pay a placement agent or a financial advisor. What does a placement agent mean? I'm not a placement agent, don't have a desire to be a placement agent. I actually don't trade anybody else's money but myself. It's either my money or the money that belongs, that I have my own money in. Other than that, I don't trade in nothing else. I don't ever want to be a financial advisor. They let them do that job because they just raise capital. I have no interest in doing that because I actually do some work for a living. On the other side to the equation, one of the best things you can do is to learn what it is to own businesses. Because in order to retire outside of Social Security, you got to have a stake in the business. And the quickest way to own a stake in a business is to own 100 shares of a public traded company, because you consider a stakeholder. Now, you may not have enough where they're going to call you on a telephone and tell you, hey, Primo, this is what we're about to do. Don't buy my stock. So you don't have that enough. But what you will have is that you will have an advantage over everyone else that does nothing. And that's just the key. You want to have that competitive advantage. If all your money comes from you sitting, now here's the thing. If you make $15 an hour, you make 25 cents a minute. So it takes 60 minutes to make 15 bucks. So if you could take $100 and you could take that and you can make more than $15 in a 30-day period, I'm not even if you swing trade. I mean, it's up to you what you choose to do, because each skill has a different craft and a different mindset and different emotional intelligence you got to have. But if you're going to be able to swing trade and you can make on $100, 30 bucks, okay, that's a 30. I mean, $100, that's 30% return. Well, that's 2 hours of your life that you've now let your money make it. So, you may say you don't have to work overtime for that. It's taxed at a less bracket. Capital gains is taxed at 10%. Your personal income is the more you make, it actually goes up. So I've always tell people you have to have that mixture. Now, later in the year, if you've already made $3,000, which is only going to be taxed at $300, so that's 10% capital gains tax. Then you got your state tax in there, but your federal is just $300. All jokes aside, if you got paid time off, go take 2 weeks off work. Tell them take leave of absence. How come? You already made the money. And I think some people don't think about that. All these people right now are going to work and they waiting 60 minutes to get paid 25. I mean, it takes 60 minutes, 25 cents a minute. Whatever your hourly rate is, divided by 60, and that's what you make. And then take 100 shares and go buy it and try to beat that. Now, I get it. You may say, hey, it's a start though. You got to train your mind to create wealth, not defer it. Now, this is what most people are doing. They're putting money in IRAs, paying a placement agent. They're putting money in. Let me just tell you, you can't own an ETF. You can't own a benchmark. I get it. People want to tell you you can't own those things. You can fund those things and pay somebody to manage that on your behalf. But I believe that most people are intelligent, they can manage their own. I believe if you get the emotional fortitude that you need, that you can acquire businesses for a living. I believe that those businesses that you acquire will allow you to make money. If you learn anything about my channel, or our channel, not mine, but our channel, there's two things I talk about. I talk about business. When I'm not doing this live stream, I go over business things so that way you can run a company. And then I talk about the stock market. And the stock market, from my point of view, which is subjective, that's why I always tell you do your own research. If you ever come to our channel, you want to get information, just jump into the body because the information is there. So that way you can stay abreast. You can see, call me out, type in a message. You can call me out, say, hey, listen, you was wrong about this. And I'm going to say, did you do your research? So if you buy a stock that I'm talking about, just know I don't tell people to do that. I'm not recommending you doing it. What I am doing is I am actually addressing the questions. If you got a stock you want me to look up, please hit it in the chat. Tell me, hey, what do you think about this stock? I got some stocks coming up I'll be talking about next Wednesday, which is not in, because it's actually in drug industry and in the hospital stock that someone asked. What I added to my watch list. I'm going to tell you this. There's going to be a lot of people to see from January to now how I done in the market based on what I use. The question will be is, am I taking my own advice? The goal is not for me just to come up here and talk to you guys every week. It's for you to realize this is what I do. It's not he's just doing this. No, I'm doing this because this is what I do. I'm only doing what I normally do. You guys may not do this. Some of you may be getting off work right now watching this video. You worked all day. Others they work at night and they at work and they watching the video. I want to tell you, thank you for that. Give me a thumbs up, give me a like, make sure you follow our channel. But every Wednesday, we do it. When I get to 10 things on my watch list, I'm gonna narrow it down. I'm only gonna have 2 positions. I'm gonna go all the way out to 10 based on me finding these or you telling me, but I'm only gonna have 2 stocks at the end of the day that I'm gonna hold. And you'll see what the results will look like. Because at the end, again, when you're in this line of work, you're either gonna be called out for being what they like to call full of cock-a-doodle-doo, or you'll find out that actually, hey, I wasn't wrong. So with that being said, I want to thank you for subscribing to our channel. Thank you for giving us a like. Every Wednesday I go over this. Once they change rates and we start seeing some of these companies that hasn't go back to IPOing, on Mondays I'm gonna have my IPO show, talk about the IPOs that are coming right now. No tech company that's not already been publicly traded since 2021. The IPOs now are very light. Anybody raising capital, it'll be hubris for me to even do it now, because all you're gonna do is get capitulated down. You'll be stuck in a stock. You'll be sitting down for 48 months. You'll be trying to, any VC that's coming out right now, they're literally just trying to screw people over at that point, because it wouldn't make sense on their overall books for them to do it. Not with the Fed's increasing rates and making any tech company basically come out at like $8 to $15. It won't be no $28 or $36. This is the worst time to do an IPO at the transitional period of a market crash. Because at this particular point, if you guys haven't figured it out already, banks do begin to default right at the it's not even a halfway point. It's like if we take it 100%, halfway would be 50. So right around the 30% mark, you start seeing regional banks. So we're not out this. You're looking at if Biden's reelected, you're looking at really coming out of this and start seeing some productivity if he gets reelected. And again, I'm not going to have a political view. Let you guys argue about that. But the point of it is that commodities, which are inputs that you have to be converted into finished goods, they'll stay high if he's in office. However, tech companies will stay low. So that means there's an opportunity in the growth sector, because the largest part of our economy is actually going to be tech companies going into the future, because that's where the growth is, especially now that when you look at food wrappers, if you pay attention, go to the grocery stores, here's one thing, you're going to hear bioengineered. That's technology. That biotechnology, that patent on food, you just need to understand that that's considered the tech industry. Beyond Meats is technology. So all of the, Beyond Meats was the first one to come out. Now you have some other ones that's coming out that's making it more competitive for Beyond Meats. So for us to come out and see, even if the Feds don't raise, we'll know later this month if Fed's going to raise. If the Feds raise, it tells you that, you still have an opportunity to buy technology stocks. Um, I want to tell you this: Twitlow came out of the Great Recession, and you guys may not know this, but Twitlow stock, when it came out of the Great Recession of 2008, that sank down very low. Then that sucker shot up to over $80 a share. There's going to be a lot of technology stocks that's going to do similar things. I just want you to know that. So when that growth sector started off, so when rates start to get cut and they start cutting consistently, bringing that nominal rate, technology take off and the IPOs will return. So that's just a clue. Do your own research. You find it yourself. But I can tell you this: regardless if they cut rates or not, there's opportunities in the market for you to grow your money, because if you just sit your money in the bank on your Cash App, money's losing its buying power, and you guys can be subjected to that. I sure not. I mean, literally, between now and in this, being able to have an extra $600 in profits is, from what you've done, and you're not day trading. And just so you know, people ask me all the time, do I day trade? The answer to that question is no. I don't day trade. I swing trade though. I'll tell you that. I'll be honest about that. I do swing trade, but I do not day trade, because I run a business Monday through Friday, sometimes Saturday. I have something that I do day to day running a business. I'm an officer in a corporation. So because of that, I don't have time to day trade. I don't have time to sit in front of the computer. But when you run a company, you actually have some clues to what's going on, because there's certain things that are actually systematic and compliance issues. Certain things right now we're seeing in the market are really compliance issues, regardless of anything else. And once you know that, you have a more peace of mind. So I will encourage everybody to check us out next Wednesday. Thank you for showing up. Please like and subscribe to our channel where you know. Thank you so much. You guys have a great day. This will be on repeat, so you can go back and watch it for whatever you missed. And don't forget to leave a comment. And I don't care if it's good or bad, you can blast me. I made myself available to the public. I respect everyone's opinion, and you may have a different point of view, and that's what makes us individuals. I can still build with you every Wednesday. If you got a stock you want me to look at, don't forget to put it up there. I'm going to tell you if I'm going to add it to my list or not. And if I don't, I'm good. You good. You guys have a great day.